just want to make it a point. You're not anonymous, no matter if you think you are or not.
Jake Claver from Digital Ascension Group. And Jake has an interesting perspective on how we can manage our wealth as we start to accumulate larger amounts of it, and having a strategy to protect that wealth and to do the things that you want to have done with it during your lifetime and after.
As far as the cold wallets go, I'll just give you my protocol. So I've got one wallet that I send on and off exchanges from, and that wallet also sends to all my other wallets that I hold crypto in. I only send transactions into those wallets. I do not remove crypto from those wallets. That's to be quantum resistant.
People who are holding assets outside of exchanges because they don't want to disclose them probably got one or more ledgers with millions on these things. It's a dangerous life. What strategies do you recommend for people to address these challenges? Welcome. This is Clinton Donnelly. And in today's show, we're going to be talking to Jake Claver from Digital Ascension Group. And Jake has an interesting perspective on how we can manage our wealth as we start to accumulate larger amounts of it, and having a strategy to protect that wealth and to do the things that you want to have done with it during your lifetime and after. So please welcome everyone. Jake, tell us a little bit more about yourself.
I'll just say thank you for having me on, Clinton. It was fantastic meeting you for the first time in XRP Vegas, and it's a pleasure to be here. So, Digital Ascension Group, you can see in the background there, I'm the director of the family office. We specialize in digital asset liquidity events. So, you make 10, 20, $100 million in crypto. We have all of the professionals in the US that would help you manage that wealth and protect it for the future. And I'm the hub in that hub and spoke model.
All right, self-custody.
Oh boy.
This is a big topic. I mean, some of the examples I put out there had to do with people doing self-custody and then the consequences that followed onto it. We have people say, like, not your keys, not your coins, but as I tell some of my other friends, you're just one kidnapping away from being broke, so if somebody steals your keys, holds a gun to your head, give me the 24 words, type it in, you're drained, you're gone. And that's very tough, because especially a lot of people who are holding assets outside of exchanges because they don't want to disclose them, like the guy I just mentioned, he's probably got one or more ledgers with millions on these things. It's a dangerous life. What strategies do you recommend for people to address these challenges?
I just want to make it a point. You're not anonymous, no matter if you think you are or not. You had to KYC to purchase the assets through an exchange, unless you went to a Bitcoin ATM and you're only able to buy so much over time. I see people try to evade it. Just play within the confines and pay your taxes. There's plenty of ways that Clinton and I can help you mitigate those tax obligations. Okay, so that's where I want to start with that. But as far as the cold wallets go, I'll just give you my protocol. So I've got one wallet that I send on and off exchanges from, and that wallet also sends to all my other wallets that I hold crypto in. I only send transactions into those wallets. I do not remove crypto from those wallets. That's to be quantum resistant. So only one key is exposed on those wallets. If I were to send a transaction out of those wallets, the other key would be exposed, and there's potential liability that they could be attacked by a quantum computer in the future. And obviously, if anybody's phishing through your email to get your keys, never disclose your keys to anybody. Never have them on any type of computer or your phone. Don't take a picture of it. Always write it down on paper. I've got multiple pieces of paper in multiple places where a few different people know where they are. So I've diversified the risk there. I don't keep all my crypto in one cold wallet. I keep it across 12 different cold wallets, right? So there's a lot of ways that it becomes complicated and convoluted, like you alluded to earlier, right? Like, my wife's going to look at this if I were to pass away tomorrow and be like, oh my God, this is crazy.
Probably she'd say different things than that, right? She probably has more expletives and I told him.
I'm sure. So I think with institutions moving in with their custody solutions, right? So we talked about poly-sign standard custody. They only deal with accredited investors or people that are through the family office or an RI, large hedge funds. They're not dealing with small fish, but they have a protocol for the cold wallet that I believe they will license to all of the other banks here within the next 12 months. And I'm pretty confident that, it'll be like your bank account. You'll define a beneficiary on your bank account where an institution holds your assets. It'll be safe. The cold wallet they created has encrypted keys that are then sharded, and then they're held in multiple jurisdictions. And when you sign the transaction, it'll pull all those keys back together, sign the transaction, execute, reshard, and then send them out again. Okay. So it's quantum resistant and it's foolproof. Obviously, they've catered it toward the high end clients at the current time, but I believe that's probably what they will license out to all of the other smaller fiduciaries, banks that will be custodians in the future. And so I think you're going to see a trend, especially with Ledger and their recent debacle of, the firmware update where people can get access to your keys. A lot of people are looking for other solutions, and they would love to have insurance on their crypto, which you currently don't have with the cold wallet either. If you get hacked, you do expose your keys, you're done. There's no recourse, right? So if you have a traditional custodian that's holding those and there's some type of insurance policy on it, like the 50 million at PolySign, then that's actual crime insurance also. It's not like Fireblocks or one of these others. They claim that they have insurance, but it's not specific to being hacked. There's just a lot of things that lead me to believe that the cold wallet solution will probably persist into the future for people that want to handle it that way. But I think a lot of people are going to choose to move it over to the traditional means that the majority is used to once regulations in place and mass adoption happens.
And having it no structures facilitates when someone dies, need to transfer authority to access to other people.
Correct.
So what other diversification should that people be thinking about when they have a liquidity event with digital assets?
When I talked about this at the conference, so I look at wealth creation and wealth management as two different skills, and I kind of look at it as a tree. So you're going to make your wealth in one vertical, that's the trunk on the tree, and then once you've made your wealth in that vertical, you diversify across a large swath of the economy. So that might be real estate, it might be businesses, it might be private equity, it might be annuities, it might be bonds, it might be stocks, it could be convertible notes, it could be debt, it could be artwork, it could be commodities. I mean, there's a lot of different things out there, and you want somebody that understands all those different aspects and is able to put allotments in different places that are inversely correlated. If this part of your portfolio goes down, this part goes up, right? So that you're able to maintain your wealth over a long period of time. And obviously you want it in things that are going to cash flow so that you can protect your wealth and you own assets that appreciate while continuing to pay you, right? Everybody loves real estate for that reason, but there's a lot of different things that exist like that. Businesses are fantastic. If you can purchase a business, I think there's going to be a lot of opportunity in that area as baby boomers retire over the next decade. Mm-hmm. And then obviously crypto, people will stake it like you talked about with Cardano, right? Which is a fantastic way. And you and I discussed the implications on that when we were at the event. As long as there's a difficulty in being able to realize the distributions, then they're not immediately taxable. Is that correct?
Yes, generally speaking.
So there needs to be a lockup period or some way that, it's difficult for you to access those funds immediately upon distribution. Otherwise, like say it's Algorand in your wallet and it just distributes to you. Each one of those distributions is income that you need to be reporting on your taxes. So that's kind of my thoughts. I work with clients that are anywhere north of 10 to 20 million up to 100 million in assets under management. And we will, work with clients that are larger than that. But at that point, you can kind of hire your own in-house people. Most people do for a single family office. And so you want to start looking at ways that you can hedge yourself against the loss and utilize the assets that you have to produce income. Maybe, again, take leverage against them if it makes sense for the interest rate, for your ability to take that money that you took at a low interest rate and earn a higher interest rate with it. There's a lot of arbitrage that can be had within that, but definitely you want to consult a CPA, wealth manager, financial advisor. And it's difficult, to your point, if they're licensed and credentialed in certain areas, they can't speak on certain things. So you have to find somebody that's willing to go out on a limb and be a little bit risque to work with, that is willing to talk about these subjects.
You're absolutely right. I've talked to people who have a lot of money and they jump from one person to another to tell them how to invest their wealth. And they're getting a different opinion from every single person.
Well, they're
And
financially incentivized to offer whatever product they can sell, right?
and each of these products are amazing, according to them.
Yeah.
And the problem I think investors should understand is that you need to have a team, because you need to start to develop people that are going to advise you. Now, you're not looking for one person who's going to provide the magic solution. Why? Because they're financially incented to help you part from your money. So you need other people who are going to say, this is what he's not telling you about. A lawyer who made a video about charitable remainder trusts. He talked about how, with $1 million, you can put it into this trust. You can give $350,000 to charity at the end of the trust. You could be getting $80,000 a year. You could get it for the rest of your life. He threw out these things. It was like the magic
No
keys
brainer.
to wealth, no tax, and you give to charity. And everybody was coming up to me and saying, well, what is with this? Is this true? Is this true? Is this true? And I had to go and, go through the annuity tables, the tax tables to show, no, this isn't true. In fact, it would only be true if you were 73 years old, because there's a lot of laws that involve actuarial calculations in terms of how these things work. Well, he wasn't disclosing that. I mean, he was a lawyer, but he was being his salesman. You need to have another party on your team, like a tax person, who's going to say, look at that and go like, well, let's tear that apart. Let's see what the risks are. He assumed this interest rate, you get this return. You're pushing the limit at that price, and you can't do that for a lifetime. Maybe you can do it for 20 years, but actuarially, if you break certain numbers, all of a sudden, all the tax benefits can come back and it could punish you. We actually showed that if you did what he said, you'd end up spending half your money giving it to taxes. So, and of course, he's a lawyer. He's selling the legal structure. And once you set up a legal structure with a lawyer, they kind of have control over it. If you want to change it, you got to go through him, so it's a guaranteed revenue stream for him. So on your team, you need to have someone who's a trust advisor. You're ultimately going to need a lawyer, a family lawyer you can trust, tax advisor, someone like yourself who's kind of the coach, pointing directions to go in and help to be a part of that board. And what you did, you mentioned at the very beginning, and I thought was really exceptional, that you help develop the policies and the thinking and the strategies that are going to start to guide you through all these decisions, because people are going to come forward with amazing investment opportunities. And if you don't have a plan and a strategy and everybody's on board, why we say yes, why we say no, those things that you mentioned up front, having a strategy and then working the strategy is so critical. And that's where people actually lose a lot of money. So I just throw that out there to people, because like when you reach that point, there is no magic guy. I have people call me up, say, I'm looking to move to Spain. I'm American and I need some Spanish tax advice. I need US tax advice. So you're looking for the wrong person. You're looking for a guy that knows 2 tax codes in his head. Just give it up. You need to have 2 people. You need someone who's on your side who can arbitrate the difference.
I want to touch on that point. So we use a software and a system that's actually blockchain based. And we allow all of our professionals in different jurisdictions, wherever they might reside, to communicate through that secure platform where it's all logged on the blockchain, right? So, and you may have some sensitive information as a family office that you don't necessarily want to send over email, those type of communications. We provide that software for our clients. And it also, it provides a lot of efficacy and accountability. So let's say you had a transaction where your lawyer, your CPA, and a third party need to sign a document. Maybe you're purchasing a property or something. And you can see right on the blockchain who didn't sign what and when, and exactly when it got to them, right? And so there's no he said, she said, I didn't get the email, da, da, da. It's no, you didn't do your job, right? So, and all those documents are immediately accessible at any time for you. So you don't have to call Clinton to get your taxes. It's right there logged. You can pull it up and get access to it as long as you go through the 2-factor authentication that's required on the system.
That's very sophisticated. That is very good. That's really bringing blockchain into your family governance. Very
Yes.
good. Well, hey, Jake, it is so fun talking to you. I mean, really, I think what we're seeing as we talk to you, we just talked in a lot of general terms, but once you have your own life, what your liquidity event is that you're anticipating, and what your family nature and challenges are, I think that's when you're going to start having a much more, even richer conversation than we did today.
Yeah, fantastic. I'd love to be back if you'd have me.
I like to have that liquidity event. So tell everybody, Jake, how can they reach you?
Yeah. So on all social media, I'm just beyond broke on those social media platforms. And that's in correlation with the mastermind. So we do private investment through that. We have an SPV provider. We go and find and source deals for our clients. It's adjacent to the family office, but that's another offering that we have. If you do want to email, you can find me at jake@digitalfamilyoffice.io, or you can go to that website, digitalfamilyoffice.io, and book a time to meet with me.
Okay, very good. Jake, thank you very much for being on the show. This time passed very quickly, very enjoyable, and I wish you the best success. Well, let's talk again.
Yes, sir. Thanks for having me.
Welcome to the Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.